Welcome everyone to the CFO Swinger Watch newsletters technical analysis video for the week of January 16th through 19th. Alright, let's go ahead and start off with the markets. So, the S&P 500's SPY's monthly time frame. Does it look bullish or bearish? There's one clear answer. And the answer is bullish. So if you take a look at the monthly candlesticks from the past 2 months, okay, not including this month, we have been making higher highs and higher lows. Okay, now that does not mean that we won't be having some sort of a pullback to create or initiate a consolidation phase. All I am saying is that we are on the longer term moving to the upside. The monthly time frame confirms it, but the monthly time frame is not the only time frame that shows us that the market wants to go up higher. If you go down to the weekly time frame, okay, the weekly candlesticks have still been making higher highs and higher lows. In fact, last week we made a higher high compared to the year-to-date highs of 2023 as seen on this specific weekly candlestick, and that high was 477.55. So the new high for this year is at 478.60, and we have been getting so close to my resistance level at 479.20, which is also shown on the monthly time frame. Right, we are literally inches away from making new all-time highs for the S&P 500. So in my longer term perspective, as I've been saying, the long-term target for the S&P 500 is still sitting at $500. And for SPX, for everyone who looks at SPX, I still believe 5,000 is still the target as well. And again, just based on SPX here as well, it looks extremely bullish as we've broken out from this macro cup and handle chart pattern, just like SPY. Okay, so again, for the S&P 500, right, the S&P 500 clearly indicates that we need to be bullish longer term. Now, short term, week to week basis, we do need some consolidation. Now, there's one thing that I have to mention. The RSI, the relative strength index, is still sitting at 62.03 on the monthly time frame, and on the weekly time frame, we're still sitting at 66.55. We are nowhere close to being overbought. Right now, obviously, the first week of this year, that little tiny initial dip caused the RSI to move down and provide us with a little tiny dip in relative strength. And there is still a possibility that we could be seeing a descending trend line for the RSI, while the price can continue to make higher highs and higher lows. And that's what we call a divergence, specifically a bearish divergence on the RSI. So in the longer term future, maybe just week to week basis, there is a chance that we can see a breakdown to the downside, the initial pullback, before we see a consolidation phase, which is what we need. And that's the reason why I want to make sure that you guys understand that there's still a possibility of retesting 460 in the short-term future. All right, but the long-term future, again, I am bullish. There's no way that I am bearish on the long-term future, right? The monthly and the weekly clearly indicate the markets are still very much in a bullish sentiment uptrend. All right, so as long as we continue to make higher highs and higher lows, or if we continue to move sideways, if we do begin a consolidation phase, I will still be very much bullish in the longer term. Okay, but just keep in mind that the weekly RSI can start making a bearish divergence on the relative strength index. Okay, but again, there's still a lot of room left for the market to move up, especially if we break over 479.20 and we squeeze to the upside as we make new all-time highs, right? Because again, NASDAQ has already done that, but the S&P 500 has been lagging. So can this short week possibly become the week where the S&P 500 catches up? We'll see. All right, but again, this 479.20 level is the key. All right, make sure you guys have it on your weekly and monthly time frames. And from this point forward, we will continue to watch the weekly and monthly time frames for the S&P 500. All right, so with that, let's take a look at our two tickers for this very short week. First off, we have Tesla. So Tesla has been very disappointing for a lot of the long-term bullish investors or simply bullish traders. And last week, we officially broke under the daily 200 SMA and the daily 50 SMA. Now that is not a good look for the bullish side or bullish perspective. And especially since we broke below the daily 200 SMA, we've been seeing the volume rising up higher and higher, even if the average daily volume has been slowly falling down. And so what I expect Tesla to do with this increasing selling volume, since we did break below the daily 200, which should have caused a lot of stop losses to hit, I am expecting one final blow off of the bottom, right? It's the complete opposite of a blow off the top. And what I mean by that is if we move down rapidly with increasing selling volume again, okay, we should be able to hit major levels of support this week and then see a very quick pivot, nearly a V-shaped pivot to the upside until we can come back to retest the daily 200 SMA. Now, if you guys remember, my daily 250 SMAs are my longer term SMAs on the daily time frame. They are the longer term supports, areas of support that the bulls have to defend. But when the price decides to lose these areas of very long term support or areas of demand, we tend to get a very quick snap back up to retest it at least once. Now, I don't care what happens after. All I'm looking for is to play the potential volatility that usually comes with that quick snapback up to retest the daily 200 or daily 50 once the price has lost and broken below both of these two SMAs. So again, the daily 200 SMA is the main point here because we haven't come up yet to retest it, which means there is that possibility for that quick snapback to that daily 200 SMA. So based on that outlook, Tesla is currently heading back down towards my current line in the sand support level sitting at 212.20. Okay, so again, line in the sand right now for Tesla is 212.20. Now, why do I say that? Well, specifically because of this. Okay, so last time in August, mid-August of 2023, we saw a rapid and similar increase in volume. The stair stepping up higher at this volume until we came all the way back down. We had a nice gap down and a rapid move down to 212.20 until we had a nice V-shaped pivot back towards this daily 10 SMA to retest it, right? So I could potentially expect to see a similar price action occurring this week on a very short week where we see a nice gap down, retest 212, and have a nice V-shaped recovery back towards to retest at least minimum the daily 200 SMA. Now, to further confirm this potential or probability of this technical analysis on Tesla, the daily 10 SMA has also gotten a bit far away from the price action. And whenever that happens, the daily 10 SMA becomes a stronger magnet for the price to want to come back to the daily 10 SMA, just like what we saw right over here, right? So if we do see that large pivot, we will potentially also hit the daily 10 SMA. Now, since I am overall bullish long-term and short-term, okay, I would really love to ideally see the price hitting the daily 200 SMA here, my yellow line, and breaking above it and then retesting the daily 10 SMA, because if the price decides to slowly come up, that will allow the 10 SMA to continue to catch up to the price and eventually converge at the daily 200 SMA and eventually break below it, right? That is a further confirmation to the downside, and I do not want that, right? But again, that will be ideal if you're able to break above the daily 200 SMA, which is currently sitting around and flatlining around 231 to 230. And if you do see that break over 230 or 231 over that daily 200 SMA, then we should be able to see that official first retest of the daily 10 SMA ever since we broke below it on this specific daily candlestick on December 29th of last year. So again, we need to see a rapid move down to 212, and I want to see a large increase in volume, because that's when the buying will come in at this 212.20-ish level, just like right over here where we saw an increase in volume, which was bigger than the previous day volume, which was a selling volume. And we can see that nice pivot, momentum move back to the upside, right? Now, from a longer term point of view on the weekly time frame, okay, if that does occur, okay, that could also possibly be another rapid move to the upside on the weekly time frame, because we will be breaking below, guess what? The weekly 200 SMA, this yellow line. Okay, so again, we have come back down to retest this weekly 200 SMA. So if we do see a rapid move down to retest 212, then most likely we will see a rapid move right back up over this weekly 200 SMA. And if that does occur, we can also, on top of it, so again, there's a lot of complementing technical indicators or signals here. We could potentially see, okay, an inverted inverted head and shoulders chart pattern here. Okay, there's a possibility of something like this occurring, right? So it's not too pretty, but there's still a possibility of this occurring, right? So again, there's a lot of complementing signals, but the only thing that I'm going to be watching out for is this 212.20 level. Now, that is the reason why I gave you guys our entry point for this week for Tesla at 212.20 on this name, okay? However, I have also given you guys a second entry point, long bounce at $200.10. Now, why did I say that? Well, this $200 level is that whole number psychological level where most people will be eyeing, especially for both shorts and long-term buyers, if the selling continues and the price breaks below 212.20. There's still that slight possibility that we don't hold 212.20 this week. So again, if the momentum continues for the sellers this week, that can definitely occur as well. So 200 can definitely become a level that a lot of long-term investors will be looking out for to add onto their long-term position. And also can be a longer-term target for the short sellers as well that are currently shorting this stock all the way back down. Okay. Now, again, this $200 psychological level can also be a large trigger area for a lot of stop losses. And so if that does occur, we can see a slight move lower, just like we did at the head of this inverted head and shoulders chart pattern, and we can have a slight dip below 200, so maybe around 198.50, as that was also a major level of resistance in the past and a major level of support in the past as well. So 198.50 can also be your preferred specific level of support if you don't want to look at the $200 psychological whole number level. Okay, now finally, for any type of profit targets, I would say 226.50 will be a great first profit target area. And obviously, if we do see a break over 226.50, then the next second profit target area will be the first retest of the daily 200 SMA, wherever that may be anytime during this week, if and only if we retest that daily 200 SMA. So for now, it seems like the daily 200 SMA is flatlining at around the 231 to 230 area. All right. Now, last but not least, we have Carvana, CVNA. So this one is quite a volatile stock. Now, the reason why I'm looking at this one, okay? So again, very, very short week. And also, a short week tends to be a great week for a lot of investors and traders to want to be day trading or simply overnight trades or having overnight trades using these very, very highly shorted, crappy companies. All right, and Carvana is one of them. It's one of the highly shorted names. And so far, I have seen a lot of longer dated option contracts with far out the money strikes for this name. And it's pretty interesting, and it's pretty interesting to note as well, because this one is still very highly shorted, which means there's still a chance, a probability that we can be seeing a potential, second short squeeze from the initial one that we had back in mid-December, right? Early to mid-December. So first of all, I want to take a look at this on the weekly time frame. So the weekly clearly shows a potential for us to make a, again, just like Tesla, an inverted head and shoulders chart pattern. We have the left shoulder here. We have the inverted head, and then potentially, okay, potentially, keyword is potentially this week, for a short week, the right shoulder. All right. Now, on the weekly time frame, excuse me, guys. On the weekly time frame, we have the weekly 10 SMA crossing over the weekly 21 SMA. And this is important because on the weekly time frame, if the 10 SMA has crossed over the weekly 21, that tells us that on the weekly we are still looking very bullish. But on top of that, if you are closely reading, sorry guys, my throat has been very, very dry today. The volume here is slowly dying down week by week. So the past 3 weeks, including last week, on this pullback, we've seen the volume die down compared to the short squeeze that we saw. Right, this very large, copious amount of buying that went in to support the short squeeze to the upside. So whenever we have low volume on a pullback, that tells us that there is not too much interest in trying to short this stock all the way back down and completely erase any type of gains that it saw for the year of 2023. And so that's the reason why I think that we can see a very good bounce at this weekly 10 SMA, which has also just shown us this bullish crossover, this weekly 21 SMA. Right, so again, when a smaller SMA crosses over a bigger SMA, so the 10 over the 21, that is a great bullish signal, especially on this bigger or higher time frame on the weekly time frame. So for Carvana, okay, we can get a very nice long bounce entry over $42.10. Okay, but if you want to just completely wait it out, if you want to see this right shoulder being developed, you can completely wait until we reach that neckline of this inverted head and shoulders chart pattern, which is sitting at 57.20 on the dot. And you can just set up your alert and buy once we're able to see a good breakout volume accompanied by this price action where it breaks over 57.20. Now, for the first target for 42, okay, I would say around 46 will be a good target. And eventually 57 will be the ultimate ideal target if you got a nice entry point at 42.10. But here's where it gets pretty crazy. So like I said earlier, that Carvana had a bunch of far out the money strike call contracts that were opened. If you do get an entry over 57.20 with great breakout volume and we start to see a short squeeze, a massive short squeeze, there is a chance that Carvana can potentially see nearly triple digits per share, right? So I have a target here at $98 because if we do break over 57.20 with good breakout volume and we start to see a complete exit of these shorts, this entire area is a huge supply area from between 57 to around 98. Okay, and so there's a huge area of supply again. These shorts are constantly shoving the price lower. So if we're able to take them out, right, force them to leave, we'll see much more buying coming in, bidding the price up higher, and ultimately continue to squeeze this highly shorted name back over to $98. Because again, there isn't much of a level of resistance, but a huge area of supply. So once we're able to take out this area of supply, we can continue to short squeeze higher until we hit 98, or ultimately the psychological whole number level, or that triple digit golden number of 100. Okay, so now it sounds completely radical and blasphemous to be looking at this price target, but it is possible. We have seen what Carvana can do, right? Carvana in 2023 went from a single digit stock to a double digit stock. That's a huge increase, right? So just even off the lows here, right, in the summer, right, to the highs that we saw in mid-December, okay? We saw an 818 plus % of an increase. That's huge, right? So there's still a possibility that we can see some consolidation to create, again, this right shoulder, which can take weeks. And then we can see that breakout over 57 and potentially see enough buying to see that short squeeze all the way up into possibly to 98 and ultimately, ideally, to that triple digit number. All right, so that is it for this week. If you guys like this technical analysis video, make sure you guys leave a thumbs up down below. And if you guys have any other tickers that you guys are looking at, make sure you guys comment down below and tell me why. And I'll happily read it and look at the chart myself as well. And again, if you guys aren't subscribed yet, make sure you guys hit that subscribe button down below. And most importantly, hit that notification bell so that you guys are always notified when I am uploading a new video or when I am live, especially on Tuesdays and Thursdays. All right, have a great rest of your night and thank you so much for watching.